Good morning. Welcome to Stock Market Today for Wednesday, December 16th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished higher on Tuesday on optimism for further fiscal stimulus. Value and growth both performed well, and all sectors were positive on the day. Leading the charge was energy, utilities, materials, and financials. Staples, comm services, and REITs did underperform. Treasuries were unchanged to weaker at the long end of the curve. Dollar was lower on the major crosses, in particular against sterling. Gold ended up 1.3%, and crude oil settled up a like amount on the day. And as we get to the desk this morning, futures are higher. S&P futures are up about 30 basis points after Asian markets traded higher overnight, led by Taiwan and Hong Kong. China did trade relatively flat on the day. European markets are also seeing good gains. Treasuries are slightly weaker with some more curve steepening. Dollar is lagging on the major crosses. Gold is up 60 basis points. WTI crude is up 40 basis points to kick us off on a Wednesday morning. That's going to prove to be a snowy day here in the Northeast. So if you're in the impact zone, please be safe. Our major averages, small caps lead again. The Qs hold the breakout. QQQ holds the breakout level. So that's important. Taking a look at the structure of the trends here, not a ton has changed, as we've been saying for the past couple of days. You can see SPY holding above that near-term support at 360, 340, the key level. As I've been saying, my view is as long as we're above 340, there's upside potential to 413. Between 320 and 340, I think you're in for some chop. Below 320, obviously, we would have to reevaluate our views because the trend would no longer be higher. For the Qs, those key levels are 260 as the main support zone that you want to see hold. In the near term, 280 is important as well. But I just think it's kind of encouraging to see Q's holding the breakout level. We had the breakout and then the pullback with some thinking that maybe it was going to be a false breakout here. Take a look right above the red dot. But so far we are holding that breakout level from the September highs with the Q's moving higher yesterday. And then IWM just continues to charge. It's roughly a double off the March lows at this point. Support 270, then near 260, and continued leadership on the part of small caps speaks to risk appetite in the market, as well as broadening participation, both themes that we've been talking about here for the past couple of weeks as small caps have been leading the charge. And we'll take a look at the micro caps a little bit later on in the show as well. So let's hit our market in a minute. What are we writing about in the note today? Well, the SPY did snap a 4-day losing streak. I mean, it didn't really feel terrible, about 1.5% or so over 4 days. But choppiness and resolving to the upside. Europe takes out the early 2020 highs. I think that's important from a breadth standpoint for equities as an asset class. Small caps continue to be the best game in town, and micro is strong too. Sentiment did moderate with that 4-day pause, but still remains more greedy than fearful. And futures, as I said, point to a higher open here today. Taking a look at the major indices now for the power bar perspective, the Dow tacked on 1.18% yesterday, 4-2 bulls to bears there. S&P 500 up 1.3%, 133 to 42 bulls to bears on the S&P 500. NASDAQ, small underperformer, 15-9 bulls to bears. Small caps, your big outperformer, 841 to 124 bulls to bears on that ratio. Bonds down tick, sending yields higher. Utilities at the top of the list. Not often that you see a risk on type day led by utilities, but we did see it for the day. Utilities add 1.97%, have a neutral to slightly bearish ratio at 7-8. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. It's in our stock of the day today. One of the names that I'm highlighting in my note to Chaikin clients today, Parker-Hannifin has a bullish Chaikin Power Gauge rating. It's in a strong trend above that rising long-term trend line. It's in a strong industry group. The machinery names have been strong. Stock added on 2.11% yesterday. Reading the chart from the bottom up, that ribbon at the bottom of the screen tells us where the rating is and has been over the past 12 months. And you can see we've been bullish since late June, early July. We're seeing some good outperformance relative to the S&P 500. And our overbought, oversold indicator is moving higher from an oversold condition, while Chaikin money flow has been strong over the past few weeks. So I see a near-term consolidation, nice spike on earnings and a gap higher. A little bit of a consolidation here. Looks like an interesting name to be paying attention to here within the marketplace. We've talked about the strength in industrials, how that's become one of the leadership sectors in the market. So you obviously want to pay attention to the leading stocks within that group. And I would say Parker-Hannifin fits the bill there. Take a look at ticker symbol PH. If you're looking for potential ideas and if it fits your process and profile. Taking a look at the sector tracker now. Movement over the last 5 days for the major sectors. Strong move yesterday in the utilities bumps them to the top of the list. Discretionary, energy, and tech round out the top 4, all higher over the past 5 days of trading. Comms, industrials, and REITs are middle of the road. Fins, healthcare, materials, and staples are lagging. So kind of interesting that you see utilities at the top of the list. Defensive group been under a ton of pressure on a relative basis of late. Some might point to yesterday's action, say yes, but utilities lead and now they're at the top of the list for the past week. I'd say, okay, it's something to pay attention to, but staples are at the bottom of the list, right? If we saw the two of them strong together, I've said this in the past, if we saw both staples and utilities strong at the same time, I'd be a little bit more concerned about what's happening in the market. But so far, that is not the case. A lot of shifting under the surface of the leaderboard, but no real changes to the trends. Those of you who get my note, you can look back at yesterday's note where we look at the sector rotation and some of the trends that are in place and remain in place over the past few weeks. Industry in focus today, pharmaceutical services. This is an interesting one because there's a case that can be made in both directions here. Pharma services over the past 6 months, let's call it an inline performer, slightly beating the S&P 1.33%. However, the power bar ratio, which measures future potential, is weak. It has 8 bearish stocks and 5 bullish stocks. It's actually the weakest subsector that we look at, 21 of 21. Some of the names that we want to avoid there: Axum Therapeutics, very bearish; Reata, RETA, very bearish; and Zogenix, ZGNX, are very bearish. However, the fund itself is breaking topside through those early 2020 highs. Take a look at XPH here. It's a neutral rating with a slight downside bias. We talked about the ratio. However, the trend is strong. So this fund is trading above our rising long-term trend line. Been a relatively inline performer for the past month and a half, but seeing a little bit of a spike here. Solid move yesterday, up nearly 3% on the day, pushes the overbought, oversold indicator into overbought conditions. Money flow has been mixed, slight upside bias here in the near term. So it's kind of an interesting group. I mean, I think if you're going to look for names here, you really have to drill down. And healthcare in general is one of those sectors where you really have to take your analysis to the industry level. You know, big difference between pharma and biotech relative to, say, services, med tech, med devices. So one of those groups where it makes a lot of sense to be paying attention to what's going on under the surface. I know a lot of people have pointed out, myself included, strength in things like biotechs. But meanwhile, yesterday we were talking about how devices were starting to roll over on a relative basis. So I really do think it makes sense to drill down in some of these sectors and look at the different moving parts, the different industry groups, and how they are performing. I think it's hard to just say, hey, I'm bullish on healthcare, right? Or I'm bearish on healthcare. I think you have to drill down and say, well, I'm bullish on biotech. I'm bearish on something else within that group. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers win. At the top of the list, some Macau numbers out. They also did a notes offering in Macau. That stock higher by 6.1%. Eli Lilly up 6% following a guidance update for that stock. Halliburton caught an upgrade at Citi. That stock higher by 5.8%. KIM also caught an upgrade at Citi, up 5.75%. eBay Did not see anything company specific to drive the trading in eBay yesterday, up 5.06% on the day. Taking a look at the loser side of the board, very bullish. Tyson TSN was down 2%. Didn't see any news to drive trading in Tyson yesterday, though I will note that they caught an upgrade today at JP Morgan. Regeneron trades lower, down 1.7%. Partial clinical hold on one of their projects. The rationale for the move to the downside. MO, nothing company specific there, down 1.6%. CHRW, same story, very bearish stock, down 1.67%. Didn't see any news to drive trading there. MKC, down 1.6% as well. Nothing company specific that I could point to in trading in that name. Let's take a look at sentiment now. The options traders in the equity market remain excessively bullish, and I don't even know what else to say at this point other than that this is the environment we're in. It's been the right call for the most part, assuming they're getting their stock selection right, as the market has been grinding higher. The 13-day moving average of the CBOE equity put call ratio down at 0.41%. I mean, this is the lowest level it's been in 5 years. And if we drilled out, I think it's the lowest level we've been probably in about 10 years. At the same time, the VIX is being stubborn. It's kind of interesting. So the VIX has obviously moderated a lot since those March highs. Continues to moderate from that brief November spike towards 40, but does not crack 20. We haven't been below 20 since pre-COVID. So that's kind of interesting. So we could say it's moderated. It's trending in the lower direction, right? So trending towards more greed, less fear, but not exactly breaking down here in the near term, which is an interesting dynamic considering what's playing out within the options for the individual equities. I will note, if you look at, say, something along the lines of the CNN put call ratio, not put call ratio, fear greed index, which is really interesting because it melds together 7 market-based indicators. I've said this in the past. I prefer the market-based indicators to get a gauge of sentiment. A lot of people like to look at the surveys, and while the surveys can be useful, I personally put more stock in what people are doing with their money rather than what they're saying, right? It's kind of like put your money where your mouth is. That is what's interesting. That's why I like to look at these put call ratios or the VIX or even the CNN fear and greed index. The fear greed index has actually moderated over the past week as well. If you haven't checked it out, you can check it out on the CNN website. It's really fascinating. 7 market-based data points that go into creating that index, which I always think is more useful, in my opinion, than the sentiment surveys or using them in conjunction with each other. Let's talk about the micro caps, right? Small caps are getting all the attention, but micro caps trading at new highs as well. IWC is the iShares microcap ETF. It does have a very bullish ETF rating here at Chaikin Analytics, and you can see just the strong trend off those March lows above the 50-day moving average in red, above the 200-day moving average in blue. Now, it is overbought in the near term. RSI remaining overbought, speaking to the strength of momentum behind that trend. But check out on a relative basis at the bottom of the chart, IWC relative to SPY, breaking to 1-year highs here. So I think that that's interesting, kind of lines up with the view that we've had, number one, on small caps and actually extending a little further down that spectrum. Definitely speaks to risk appetite in the marketplace. Right? These are arguably some of the more risky companies out there, and the fact that they are outperforming and trading well sends you a message in terms of what investors are looking at and what investor appetite is towards taking risk at the moment. So whether you trade them or not, I think there's still useful information that can be gleaned from paying attention to something like the micro caps, which is why we do it. Those are run-year relative highs. And then finally, take a look at Europe. Right. I mean, Europe has arguably been one of the weakest regions of the global equity market through 2018 through 2020. However, VGK is now breaking topside above its late 2019, early 2020 highs, above the 50-day, above the 200-day, and actually beginning to outperform relative to the S&P 500. Now, one of the themes that I've talked about a lot in my notes lately has been these pockets of outperformance outside of the U.S. So for investors who do look globally, I think it makes sense to be paying attention to some of these regions and even some of the individual country ETFs, if you please, because there are actually areas of the globe that are outperforming relative to SPY. That'll wrap us for today. I'm going to get set for our snowstorm. You can take us for a test drive, chaikinanalytics.com/test drive. Have a great Wednesday. I'll be back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.